Hello everyone and welcome back to TradeSmart. In today's video I will backtest the trading strategy 1200 times on different pairs and risk-to-reward ratios to see which combination gives the best results. First, let me show you the strategy, the pairs, the risk-to-reward ratios and the risk basis. But before we get into that, just a quick note. We just launched our Discord channel where you can talk with others from the TradeSmart community and with the TradeSmart team. So if you're interested in that, our Discord instruction video is linked down in the description. We are going to test this strategy on the Bitcoin USDT pair, the British pound versus United States dollar, and the S&P 500 using the SPX ticker. The two different risk-to-reward ratios we are going to test is the 1-to-1 and the 1-to-2. And finally, we are going to check two risk bases, the 1.5 times ATR and the 3 times ATR. In every combination, we are going to use the 15-minute chart. Each combination will be tested for 100 trades, so in total 3 pairs times 2 risk-to-reward ratios times 2 risk bases equals to 12 combinations. Because if each combination will be tested for 100 times, the total trade number equals to 1200. Now let's put aside the math and see the strategy. For this strategy, we are going to use one entry signal indicator, which is going to be the big snapper made by just Uncle L, and one stop loss take profit placement indicator, the NNFX ATR. On the big snapper indicator, I use the default settings and untick the ones I am not going to use. On the NNFX ATR, first let's set the take profit value to 3 and the stop loss value to 1.5. Then go to the style settings, untick the main ATR and set the line design to step line. Once you got that, you are all set up. Now let's see the rules for long and short entries. So for a long entry, first you need to beat the price to close above the MA. As you can see, this is the moving average we are going to use. Second, a big snapper long signal should appear, which you can see right here. And third, if the signal candle is red, but the following candle is green, and the first rule is still valid, then you can enter on the candle after the signal candle. So let's say this candle, when the signal appeared, would have been red, then we would have waited for the second candle to close, and if the second candle would have been green, then we could have still entered. But in this case, as you can see, the signal appeared on this candle, the candle was green, and the candle close was above the moving average. So this is a valid long entry. Now let's place our stop loss and take profit placements. As we are going to test different combinations of the 1.5 3 times ATR take profit and the risk-to-reward ratios, now I'm just going to set it to a 1.5 ATR risk and a 3 times ATR take profit. As you can see, this trade would have been a winner. Now let's see a short example. For a short entry, the price needs to close under the moving average. Then we need a big snapper short signal, and if the signal candle is green, but the following candle is red, and the first rule is still valid, then you can still enter on the candle after the signal candle. So the third rule means, if this candle would have been green, but the candle after the signal candle would have been red, then we could have still entered into a short position if the price is still under the moving average. In this case, as you can see, when we get the short entry signal, the candle was red and the price closed under the moving average, so this is a valid short entry. Just as with the long example, we are going to try out all the different take profit, risk and risk-to-reward ratio combinations, but for this example, I am going to use a 1.5 risk and a 3 take profit. So we are going to enter a short position right here. We are going to put our stop loss to the NNFX ATR indicator, and we are going to target 3 times ATR. This gives us a 1-to-2 risk-to-reward ratio, and as you can see, this trade would have been a winner. If you're not fully understanding the third rule, then just look into the backtest and you will find plenty of examples. And now let's see all the 1200 backtests. After each 100 backtests, I will show you the results and the equity curve, but won't give any of my opinion right there. I will talk about only the 2 best performing one and the one that performed the worst. So let's get right into it. If you like my content, don't forget to drop a like and subscribe if you haven't already. That helps out this channel a lot. Thank you. And the results are in. Here in this Excel sheet, you can see all the results which we made out of the 1200 backtests. Here you can see the different risk levels we used, and here you can see the different risk-reward ratios we used. So the first one is the 3 ATR risk base with a 1-to-1 risk-reward ratio, then the 3 ATR with a 1-to-2 risk-reward ratio, then 1.5 with 1-to-1 and 1-to-2. Here you can see the S&P 500 results, here you can see the GBP USD results, and here are the Bitcoin USDT results. I collected all the win rates, the gain on the accounts, which is in percentage, the profit factor, which is basically all the losses divided by all the wins, and the daily profit in percentage, which means that how much gain in percentage we would have made in one day. And the most important one is the ranking sheet. So here in the ranking sheet, you can see that I ranked all the different settings based on the daily profits. So at the first place, which produced the best results, have given us a 0.58% gain on the account daily, which brings us to a 20% gain on the account total. And the worst results would have lost us 1.29% daily and would have resulted in a 28% loss on the account in total. There are two ways to ranking these strategies. What I usually do, I rank them based on the daily profit in percentage. The second way to rank these strategies is by looking only the gain on the accounts after 100 trades. But let's say you are using a very high time frame, let's say for example daily, then these results would have taken years to complete. But with a 50-minute time frame, you will get those results much faster. First, let's see which settings performed the worst. And that was the Bitcoin USDT pair with a 3 ATR base setting and the 1-to-2 risk-reward ratio. These settings would have produced us a negative 28% gain on the account with a daily loss of 1.29%. Now let's see the best performing one in the daily profits. And that would have been the GBP USD 1.5 ATR risk level with a 1-to-2 risk-reward ratio. These settings would have gained us a 20% on the account after 100 trades. Now let's take a look at the equity curve. In this equity curve you can see a very nice uptrending movement right from the beginning. We had some pretty serious pullbacks, but every time we had those pullbacks we recovered to the previous base level and started to going up from there. At the end you can see that we have a nice win streak and started to going up on the equity curve until the end. This equity curve is not the prettiest I have seen, but it is a pretty good one. I would give it a 7 out of 10. And now let's see which settings performed the best looking only on the gain on the accounts. And that would have been the S&P 500 using a 3 ATR risk base level and a 1-to-2 risk-reward ratio. With these settings, you would have made 44% gain on the account with a 0.32% every day. Now let's see the equity curve for these settings. Now this equity curve is pretty interesting. As you can see at the beginning, we were trending sideways and even going under the zero line a bit. But at around the 33rd trade, we started going up rapidly. And basically within 70 trades, we ended up gaining around 40+% on the account. With this backtesting, I wanted to show you how different results you could have got with only one strategy using different ATR risk levels and different risk-reward ratios. So it is crucial when you do your strategy optimization to find the best risk level base and find the best risk-reward ratio. If I would have to choose the best settings out of these 12 settings, I would go with the S&P 500 with the 3 ATR risk level and 1-to-2 risk-reward ratio. Because 44% gain on the account is more than double than what we would have got with the best daily profit settings. One more thing that needs to be noted, as you can see all the Bitcoin USDT pairs performed at the bottom of the ranking, and probably that's because when I made the backtesting, I backtested this strategy in a pretty sideways action environment. And as you know, in sideways price action most of the strategies are getting bad results. And that wraps up this video. If you like this type of content, don't forget to let me know down in the comment section, drop a like for the YouTube algorithm, and subscribe if you haven't already. With that said, thank you all for watching, see you in the Discord chat, and see you in the next video.